All right, what's up, Tycoon? Super excited for today's video. Going to give you guys another market update on VIX, the volatility or fear index. All right, which I think is the most important thing to watch in the stock market each and every day. It's really going to give you the overall sentiment and kind of let you and help you better understand the market sentiment and direction. Okay. But before we do that, we're going to start off looking at this article here. Okay. I think that this is a really important article. So that's why I'm including it in this video before we hop into the chart. So, make sure you stay till the end so you can watch the chart. There's some bullish divergence happening in the VIX that could cause the market to drop. But maybe just temporarily. Okay. Kathy Wood's growth stocks are primed to go parabolic. All right. That's the headline of this article. And, a lot of growth stocks have been performing very well in the past month. Okay. Some key things that we highlight here, though, is that the number of NASDAQ 100 stocks trading above their 200-day moving average crossed from below to above 20% this week. All right. So it was below 20% and it crossed back above 20%. This is a bullish breadth crossover signal that always leads to big rallies. Okay. Millionaire minting stocks from 2020 could see a repeat performance in the second half of 2022. Now, these are some big words that they're throwing out there, some big claims. Okay. The 2020 market rally was just insane, especially with those growth stocks and pandemic plays. For that to be a repeat performance in the second half of 2022, those are big words. All right. They go over some of the stocks like Shop, Roku, Square, Zoom. All right. The Art K fund. But the main thing that I want to show you guys, okay, is some statistics, all right, about the NASDAQ 100 stocks trading above their 200-day moving average, all right, how it crossed from below to above 20%. All right. Again, it said it's a bullish breadth crossover signal that always leads to big rallies. And when I say always, I mean always. Since 2008, this signal has led to positive stock returns over the following 60 days, 100% of the time, with the average return in that stretch being 15%. All right. I mean, those are huge claims. All right. That's something that really caught my attention and caught my eye as I was doing some studying and some reading up on the market this weekend. If this is going to be true, we could potentially see the NASDAQ go up 15% in the next 60 days. And who knows what that would do for individual stocks, right? Some of the smaller stocks, smaller growth stocks, right, that have been just taking a beating, not really catch a break, right? So, pay attention to those. Find some tech plays that you'd be interested in, and just to see, if that is going to be true and play out. All right. So we'll go ahead and head back over here to the VIX. And the reason I love watching it is, again, it gives you market context, clarity, helps you understand the direction, why it's moving. Okay. So whenever you see the VIX spiking up, that means the S&P 500, the SPY, is going down. All right. Typically is what that's going to mean. All right. So, I have these ovals here highlighted. These are the Fed meeting and rate hikes. This is each time we've had the Fed meeting and rate hikes, the volatility index has peaked above 31 and come up here to about 34.55, even going higher, before that. All right. A few times. And, above 38.94 is going to be peak fear, in my opinion. And we haven't got that yet. Okay. So, everybody's looking for a stock market bottom. In my opinion, we haven't reached the peak fear yet. We still kind of have to be on the worry for a bottom. But, the stock market can rise. All right. And then the VIX volatility index hit this peak fear when the stock market is at a much higher level. And when it drops, it may drop back down and create a higher low. Okay. So, it doesn't mean that the stock market has to make an even lower low than it's already made. But, it's an area where I'm going to be looking to go long in the stock market once we, come up to here and reach these peak fear levels. Okay. But another good time to potentially go long is right after the Fed meetings. Okay, we see the massive spike in the VIX. All right, and then shortly after that, each time the VIX pukes. Okay, and just takes a big dump and goes all the way down. Okay, we see that here again, and then dumps down. See it here again, dumps down. All right. That's the main thing that I'm looking at, and the market rally could continue. All right. If and VIX could head all the way back down to 18. Okay. It's really amazing to see it below 25. All right. but below 20 is going to be even more good for the stock market. Okay, so look out for that. All right, if you continue to see the volatility index dropping and it's heading down towards 20 and 18, you can expect to see some of those, tech stocks and perhaps that rally, that 15% rally that we just read about. Okay, so we'll go down to the 1 hour chart now. All right, and I'll just show you some of the things that I do to chart it up. Okay, I know there's a lot of lines and stuff on the chart, but these are just some of my valid support and resistance levels that I'm watching. Okay, and we have the gaps. Okay, so we've been looking at the gaps to fill on VIX. Okay, VIX does this, and it typically creates these gaps and then fills these gaps very shortly. Okay, if we look, here's another one even right here. Okay, we filled this gap right here very quickly. Okay, so what I mean by that is VIX is going from one candlestick all the way up, right, and just creating a huge gap in between the candlesticks on the 1 hour chart. These fill about 90 to 95% of the time historically in the stock market. It's just a matter of when, right? So we had CPI data coming out, PPI data coming out, just skyrocketing VIX, and then actually after the data came out, you see the volatility index just started spiking down and just going straight down. It filled this gap. We spiked up again. Okay. It dropped hard. We spiked up again, came down and filled this gap. And eventually we filled this gap all the way down here to 25. Okay. So that was very, very nice to see. That gap was from basically like the last Friday in the stock market, or Monday, I believe, from last week, right? And we were waiting on that gap to fill for the entire week. And Friday was just an amazing day. The stock market and futures opened up very green, and then it continued green for the rest of the day. And that's why we saw the VIX continue to drop, and it filled that gap. So just think of it like this: like if you're able to catch the VIX rejection up here, right, and you enter a bullish position on SPY, the S&P 500, right? This thing dropped so much, all right? Those are going to be really big gains on your call options if you're investing in call options on the SPY based on a VIX rejection, right? We have a huge drop. Okay, let's see how much that drop is. 15% drop, okay, in one day in the VIX. All right, if you see VIX dropping 15% in one day, the stock market is going to be performing pretty well. All right. Now there is some stuff to be cautious of. If we go to our 4 hour chart, which I'll do that right now, we have a little bit of some bullish divergence on the 4 hour chart. So let me highlight that right here. All right. So we're actually going to go to the 1 hour chart and start off there. Okay. So we have these little ovals here. These are going to be lower lows. So while the price is heading lower, all right, we look at our relative strength index on the RSI, we're actually getting higher lows. All right. So, we have a nice support on, the VIX at 20.22 on the RSI. But we can see, here's this low. We have our bottom on the RSI for the VIX. And we come up lower and on the price. Okay. We come up a little bit higher here, and we continue that trend. All right. So, we may bounce. We may see the VIX, shoot back up as it just dropped, 15% in like the past 2 days. And, that could be a good, place for you to start getting a re-entry on some bullish positions in the stock market, right? Once you see the VIX come up and get that bounce, that potential bounce off the bullish divergence. We just read an article about how, things could go up about 15% over the next 60 days. So, that's the things that I'm watching. If we go to the 4 hour chart, we do have a little bit of some bullish divergence on the 4 hour as well. And we'll take a look at that right here. Okay. So you can see, we're making lower lows on the RSI here, but we are creating a little bit of higher lows as well. Or on the price, we're making lower lows, but on the RSI here, we are, making some higher lows. So I would look to see if we're going to get a bounce here, and the VIX is gonna rise. Don't be fooled, okay? And that could be a good entry to start going long on some of these tech plays over the next month or two.